Let's start with the last lesson of our masterclass. As I told you, today we will learn how to find opportunities, trading and investing on the market. If you lost the previous lessons, you can go here on Forecaster.biz and go here, tutorials, where you can find all the previous lessons. As you know already, probably, you can go on the Forecaster terminal and search directly for a specific instrument, a specific index, commodity, forex, and everything directly from the search bar, as we do with Google. But exactly as we do in Google, we can also go here and on the right part of the page, up here in the page, you can find all the tools provided by Google. The same is for Forecaster. Here up in the page, you can find all the tools, and especially if you would like to find opportunities, this is the way. If you're looking to be inspired by the forecaster, you have to search the opportunities going through all the tools. Okay, the first one, the most direct tool you can use in order to have trading and investment idea, is the quantum screener. This is something really interesting. It's something we also made some specific videos in the past. If you go back in our YouTube channel, you can find a specific video regarding the quantum screener. Here, investing like Jim Simons, quantitative trading real example, and Quant Screener Forecaster Terminal new tool for gaining in the stock market. Here, you can find these two videos on our YouTube channel. Anyway, the tool is very simple because it do something really simple at the end of the day, but we have so many data today to organize and to analyze that of course we cannot do without a tool like that one, like this one. Okay, so very simple. How does it work? Very simple. You have to go here. You can search for a specific asset class. Okay, so for example, if you are looking for indexes, very simple, you can choose indexes. If you would like to trade and investing on the S&P 500 stocks, you can go here on the S&P 500, and that's it. Okay, let's go for the indexes right now for me to be very clear on the explanation. So if you choose indexes and you choose the time frame you would like to trade, for example, let's do 3 months, and you can also choose if you would like to have to uh, to 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 have a long or short or both the trades. Let's go, for example, only long at the moment. The system tell you which are the instruments that has the best correlation at the moment. Okay, a combination of best correlation and the best win rate and the best average return. So very simple. For example, at the moment, if we would like to trade indexes and we would like to trade for a period of 3 months, for example, and we would like only long trades, the Bovespa index, which is the Brazil index, is the best option at the moment because the actual price, okay, is correlated 80% with the 30-year seasonality. Okay, with a winning rate of 60%, the average return for this trade is expected to be at least 10%. Okay, if we open this specific instrument, as you can see, we go directly on the seasonality page and we have all the data. Okay, so the system automatically select which is the most relevant seasonality because of its correlation. So at the moment, the current year, okay, so the actual price for the Bovespa index is 82% correlated with the 30 years seasonality, okay? It means that this index today, the current year, is moving like it did on average in the last 30 years. Okay? It's something very simple. Of course, we can do it and we can find these opportunities because the system calculate for every indexes across the globe and give us the best opportunity at the moment. Okay, we can, for example, switch. We can go to, I know many of you use the S&P 500 stocks. Okay, look, for example, with the same parameters. Okay, so we just changed the asset class. We move to the stocks. Okay, but we have 3-month and long trades. The first trade available is United Health Group Incorporated, which at the moment has an 87% correlation with the 3-year seasonality. What does it mean? If we open it, look, as you can see, the current year, the actual prices in pink are moving 86% like they did on average in the last 3 years. Okay? So here you have all the statistics. If the price right now are moving like they did in the past, okay, we can expect something like price it did in the last 3 years. So for example, in this specific period, which goes from tomorrow until the end of August, 3 months, of course, in the last 3 years, we had 100% of winning. It means we had a positive return in every year in the last 3 years, okay, with an average return on 9%, okay? As you can see, this is the return we had in 2024. This is the return we had in 2023. This is the return we had in 2022, starting from tomorrow, okay, until the end of August, okay? In this specific period, in this window, time window, okay? So, in this case, we can go directly to the chart and we can build our strategy. For example, what happened if, for example, I select this period and not starting from today? Look, we have a better result because we have 100% of return, but the average return increased. It's now 15% compared to 9, okay? So thanks to this tool, you can have many trading ideas on different asset classes, okay? And you can then select the best for you, okay? In this case, for example, you can now decide, for example, to wait a lower low, for example, on United Health. You can just wait, for example, for the specific date, which is the 18th of June, okay, you can just play the market as you would like to do. I mean, there is no a specific rule. For example, in my opinion, the best way to trade this market could be, for example, right now, since we have a very oversold stock at the moment, just to buy a portion of the entire position you would like to have, and then if the prices goes below the previous low, adding another portion, okay? But anyway, you can just trade as you prefer, as you like, okay? And what it's interesting is that thanks to the correlation, we have a specific idea of what we can expect from the future, okay? Because, for example, in this moment, we know that prices are moving like they did on this seasonality, the 3-year seasonality. So, for example, starting from today until the mid of June, let me check if we can be more precise, perfect. We can expect something like an average return for a short of 6%, okay? So in this case, thanks to the fact that current year actual prices are moving like the 3-year seasonality, we can just wait for another drop in prices and then start to buy, okay, this specific stock. What's important is that we found this opportunity thanks to the quantum screener, okay? And this is something we explain much better in these two videos where we present this new tool on the Forecaster terminal. Is exactly what Jim Simons did in his entire life, treating stocks prices as mathematical signal, okay? In this case, we just use mathematics and statistics and correlation in order to find opportunities. We doesn't care who is United Health. We doesn't care what's behind a specific instrument, what's behind a specific company. Anil, which is the best correlation in terms of time? For example, about 3 years, 5 years, 10 years. Look, this is a very nice question because actually there is no a better time frame, okay? Because, for example, in this case, we know that the current year, so the actual prices, is moving like the 3-year seasonality. So we don't care. We don't care. It's just 3 years, okay? Because this is just how the prices are moving right now. If they are moving like they did the last year, or if they are moving like they did on the average of the last 3 years, we really doesn't care, okay? Because they are just moving that way, and if we know that they are moving in this particular way, this is what we can expect from the future. Andreas is telling us, I normally sort it with win rate percentage, maybe over 8%, and win rate and correlation. Okay, yes, there is no a specific way you can use it, but for example, you can sort it, of course, for win rate, average return. You can sort it for best correlation. By default, we have the best to worst activated, which do an average of all these columns, okay? But as I told you, there's no a right way to use it. You can, for example, look in this case, IQVIA Holdings is 97% correlated with the 1 year seasonality. It's in a very high correlation, very high. You can, of course, see also using your eyes that they are moving really, really similar. Okay. So, for example, in this case, this stock is moving like it did the last year. So, for example, in this case, what you can do, for example, if you just switch, if you select this period, as you can see, we have a more 8% of downside possibility, okay? A downside potential, okay? So for example, in this case, what I would like to do, what I prefer to do is just waiting another drop and then maybe trying to have this upside potential. As you can see, last year, in this specific period I just highlighted on the chart, this stock gained 18%. Okay, that's it. So you can start from the quantum screener. You can choose the time frame you would like to trade. You can choose the direction, long, short, on only long and short, and then the system give you, let's say, the best opportunities. Once you have the best opportunities, you can go deeper and you can use your strategy, your own trading strategy, your entry points, or you can use, for example, the overbought and oversold. I mean, the timing for the entry, it's up to you. Okay? Andreas, is the quantum screener the best playlist to get the next good trade? If you are talking about trading, okay, and not investing, I really think quantum screener is one of the best screener you can have right now on the market, because this is pure statistics and in the long run they are working. Okay, perfect. The something else you can use as inspiration for your investment idea, in this case, is the break-even. This is, again, a very simple idea, but very difficult to do without a software that do it, okay? In the break-even page, as you can see, as always from the explanation, you can find the stocks that, after a series of at least 5 losing quarters, move to positive net income. Okay? Examples of stocks whose stock market price began to rise immediately after reporting their first quarter in profit are many. Here are some examples. For example, I don't know if you remember Palantir, which is very famous today. These companies started to rise on the stock market exactly when they reported the first quarter in profit. Okay, we saw this pattern so many times during my 20 years in front of a PC investing. Okay, I was really young when I started, and I saw this recurring pattern many years. And then when I created the forecaster, this one of the first thing I asked to my developer, please give me a page and give me and put in this page only the companies that for the first time they have a quarter in profit. And for example, we talked a lot in the past about Twilio, which is in a very interesting company. Look, Twilio, you can find Twilio in this page for a very simple reason. The last quarter was a profit quarter for the company, and it was in profit for the first time. That's it. Okay. As you probably know, especially if you follow, let's say, my webinar since a while, if you go to any stocks on the market and you go, for example, here on the overview page, let's take Nvidia as an example, but it works for every company in the world. As you can see, prices follow the results of the company. Here in the overview page, we have the chart of the company on the stock compared with the net income. And as you can see, prices goes up when the net income goes up, prices goes down when the net income goes down. Okay? And this is why we have huge opportunities when the prices go very far from the net income line. At the same time, this is why we can find very interesting stocks when they turn in profit, okay? Because in the long run, companies start to rise in the stock market when they make money. And thanks to the forecaster, we know all the companies that for the first time, or at least after a series of 5 losing quarters, they go back to profit. And this is a very easy tool, very easy, but nowadays we have too many datas and it's something we can, it's impossible to do with the software that do it automatically, okay? Anil, how often the break-even page is updated? Immediately after the company announced the results of the break-even? Yes, exactly. Every time a company publish a new quarter, of course we receive it, okay? And if it match these characteristics, it goes directly in this page, okay? For example, at the beginning of the month, we add a new participant at the break-even page. I'm talking about Fossil Group. Okay, here we are. You can of course ask which is the business of this company to our Forecaster AI agent. Okay, and of course you can go deeper in the analysis. For example, in this case, look, I don't know nothing about Fossil Group at the moment, but I don't like, for example, these results because the sales are shrinking, okay? Yes, we had for the first time a profit, but look, I mean, also the sales are really bad. So I don't like, for example, this company, okay? Because the results are really strange. And then also the Z score is very bad, okay? I don't like this company. I like, for example, Twilio. Twilio is a very nice company because look, the results are growing. Also, the net income is improving. Okay, they lost money in the last year, but they are improving their results, and this is the first time ever they have a profit quarter. Okay, if we go here, we can find, of course, we have to go deeper inside the analysis, and as you can see, for example, we can find a company which is solid with an Alt1 Z-score of more than 4, so the risk of bankruptcy is very low, very interesting. We have a company with a positive momentum also in the Piotrowski score, and we have a company which is not manipulating earnings. So I like this company. They just turn it in profit. This is why we cannot rely on the fair value, because it's very difficult to calculate a proper fair value with a company that lost money since ever. Okay. But we can go deeper. We can analyze the business. We can analyze everything thanks also to the AI forecaster agent. Okay, we can remember to go here and have a look to the transcription of the quarters, because here you can find the positive news, but especially you can find the negative news and the risk and concern. Okay, we have always to analyze the risk and concern. Remember, you have the raw part, the raw results, and here you can ask the artificial intelligence to analyze the data, okay? Both annual and quarterly, very interesting. Balance sheet and cash flow, you have everything. But what is more important right now at the moment, this company is starting to do buybacks. Look, they started at the end of 2024 to do buybacks, and this is something really amazing, because as I explained when I talked in the stocks lesson, you can find on our tutorial page here, stocks stocks investing here, the second lesson, you can find a more in-depth analysis of the buybacks. This is very interesting. So for example, this is a very nice company, and we bought it, okay, because for the first time ever they turn in profit. Okay, the company is nice, the business is nice. I mean, this is how we use the break-even section, which is very, very nice. Okay. Another section I really use is the macro map. The macro map is very interesting because we can see which are the most interesting sectors in a specific moment. As you can see, here you can find the statistics. So you can find, for example, in which phase of the economic cycle a specific sector is, okay? And also you can find the price change. So you can see, for example, how specific sectors are moving, and you can, for example, see how a specific sector did in the last week, how a specific sector did in the last month, in the last 6 months, and so on. Okay. Thanks to this tool, you can see, for example, that the energy sector and the healthcare are in what we can call a recession. Okay, you can find, for example, that materials, consumer cyclical, information technology, industrial, utilities, and financial are now in an expansion moment. Okay, what you can do is very simple, because if you are interested in a specific sector, you can go directly here, where you can find all the stocks, all the companies inside this sector, okay? And you can rank them with the best to worst. For example, you can find which are the most underrated company. You can go and have a look to the most important ratios. For example, you would like to see which is the company with the highest dividend yield in the communication service sector. Here you are. You can find it with just one click. And of course, you can also go here and find which are the best performer, which are the worst performers. So for example, you would like to see which are the best performer in this specific sector in the last month. Perfect. Here in a click, you would like to see which are the worst performer. You can go and have 2 clicks and you can find all the data here. Okay, very simple. Okay, what is very interesting is that, for example, now we are in an expansion um, phase, for example, on basic materials. Okay, but at the moment we have a bad correlation. Look at consumer cyclical. We are in expansion, and we also have a very high correlation with the seasonality. So we can go here and we can see exactly, we can go here. If you click this button, you can find the chart of the S&P 500 sector index. This is exactly the consumer discretionary sector put on chart. And as you can see, for example, you can highlight a specific period on the, for example, last year, which is the year with the highest correlation, okay? And you can see what we can expect. As you can see, you can go directly on the macro map and you can be inspired by um, by a specific sector. For example, you know that consumer cyclical is on ramp, is in expansion, okay? So, for example, it's a good moment for going in the specific sector, okay? We said consumer cyclical, you can go here and try to find opportunities, for example, thanks to the momentum. So you can rate, for example, which are the best company in the last week and the last month, and you can go and trade them because the entire sector is in a positive momentum, as you can see here on the macro map. So momentum is one of the best strategy if you know how to handle it. Okay, you have many ways to use the forecaster terminal, and starting from the macro map is a very interesting method to find opportunities. Okay, of course, the last tool I would like to show you is the rankings. Of course, as I told you, here you can find indexes, you can find the sectors, and you can find industries, because every sector, we have 11 sector in the S&P 500, are divided also in industries. Okay, so you can really deep dive and find something really interesting regarding a specific sector.